The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. So let's start out with a little bad news. I really thought this gold had a chance at 11.20 to 11.19 today, folks. It looked like it was set up so perfectly. We had a beautiful ABCD pattern, 3 drives, everything was there. It bounced about $4 from that point and then has taken a flying Melinda. We're heading down at least to the 786, which will be down at 11.10 per ounce. Silver actually looked better on the charts. It's actually held up a little better, but frankly, it's looking like, not looking very good either, because these commodities just seem to make up their mind when they want to go lower, they go lower, and there's not very much else you can do about it. So that's pretty much what we're looking at this thing here. So we'll see if this is going to be the case. Now, couple of things from what we talked about yesterday was the bond market. It had that perfect pattern up there at that 158 level, and we backed off about 1.5 points from that. But given the fact that the stock market, Dow's rallied over 300 points from the bottom yesterday, which was right at a 786 retracement on the dailies, by the way, we had several, ideas that this was going to be a pretty good bottom in stocks, just because of the way the bond market was acting. We talked about this yesterday on the show, that the bond market had a great deal of resistance up at that 158 level and change, and we got to 158.05. That happened to be a perfect 1.27 of the high from the 24th down to the low of the 27th, and we're trading at basically 157 and change right now. So it didn't back off very much as of yet, but we'll wait and see. We've rallied quite a bit in stocks overnight. We rallied well over 60 points, no more than that. We rallied about 80 points in the NASDAQ. We rallied 40 points in the S&P, and as I mentioned, about 300 points in the Dow Jones. So we'll see how this market opens here in about 20 minutes, and then we'll see where we stand. I will not be on the show tomorrow. I have to travel to New York City to visit some friends, and so I will be on the train. Will not be able to, but Friday I will be giving a show from up that way, and then I'll be back in Philly for another week, and then finally back home to Tucson. I'm going to be in Las Vegas speaking at the Money Show. This is my last public appearance for those folks. I was the first person that they asked to speak way back in 1998, and I was Jim Sugarman and Tim Borkman were running the show, and they asked me to come to California and give a 1-hour talk, and I thought it was going to be to a bunch of traders in Southern California, because it was held at the Ontario airport. And when I got there, I showed up in just a pair of leisure slacks and a polo shirt, and there was cameras from CNBC and a whole bunch of other places there, and they were interviewing all kinds of people. There were 2,500 people at that very first one. It later, takes in thousands. It's not quite as big as it used to, of course, but that was the very first one, and I did all of those up until 2007, and then I quit it, and I'm going to do my last one this time in Las Vegas. We've got a lot of friends there, and some friends are coming in, and we're going to, give a couple of speeches, and then back to Tucson, where we'll be there for, the remainder of the season until we come back here in Philadelphia for the holidays with the children. Anyway, that's what the schedule is. So it's everything's, I'm still above ground, staying away from open graves. So that's all you can do. And, we'll see what's up with some of these markets. The question is, how much are we going to rally off of the bottom that we got? The first number that we're looking at, of course, was 1900 in the S&P, but the second number that we talked about yesterday is the 1918, and that would be an equal move that we had in the ABCD structure in these markets. Now, if we take a look at the NASDAQ, this is one of the things that we were mentioning yesterday. We had this going on in the NASDAQ and the New York Stock Exchange Index and the S&P, with the NASDAQ, of course, being the weakest. It made a near perfect ABCD from the high that we made, back on the 17th. Well, a 382 rally of that move is 300 points higher at 142.08. So, this is how much that NASDAQ could run, if it wants to. Remember, on the 24th of September, the market rallied 200 points. Yeah, a little more than that. Let's see, 100, 200. No, 170 points to make a 50% retracement. So it could easily do that again. Now, this is a really important bottom, because if we only rally a little bit today, if we don't get any higher than 41.40, which all we did was we went up there and took out the previous day's high. So far. I mean, it's still real early, but that's all we were able to do thus far. And if that's all we can do, and then it rolls back down again, then you're looking at some really, really more downward move into this October 6th low that we think is going to be the important one. That's the one where Bradley is forecasting a really important point. But more importantly, Bill Ehrman of Ehrmanometry says that should be the bottom for a good 2 to 3 week rally, and then down more, because we've made a major top in all these stocks, folks. I don't see how you could possibly look at it any other way. If we just take a look quickly, again, like we always do, and that is, we'll look at the breadth of the market. You'll be able to see that the breadth of the market is still getting worse and worse, and it just looks just far worse than you could possibly ever imagine. Now, someone's asked a question about the gold. Yes, there's an ABCD down here at 1910, 1911. I think we're getting close to that spot right there. When I trade gold, I usually risk from $3 to $5 per ounce, because I believe these numbers are so accurate that they don't miss by very much. And I took my stance at 11.19. I was out at 11.16, and actually I got a better fill by 1 tick, which really surprised me. And it was a multiple lot, and that was 5 lot. It was no big deal. But on one of the lots, I actually got a better fill, which really surprised me, because it is electronic. So anyway, go back to the breadth. The breadth looks terrible. We're making new lows to new highs. As soon as we start to see that turn a little bit, that'll tell us that we're going to have at least a substantial rally that might last several weeks, and we will get one of those. There's no question about it. It's just a question of when it's going to come up. My best feeling is that is going to start around October the 6th, go into probably the 19th or 20th, which is another key anniversary date, as we remember, for 1987, and that we'll see what happens from that place. So, but the opening will be interesting, because every time these things open sharply higher, they have a tendency to sell off. Whether they do that this time or not, remains to be seen. I have a question that someone asked me about the British pound, and I'll bring this up here because this is a trade that I've been in for quite a while, being short the British pound, and I wanted to show you what this pattern is going to look like, because we are coming into some really interesting support down here in this 150 to 151 area in the British pound. We're only about less than 100 pips away, between 100 and 150 pips away from this, so this will be quite interesting. And we're having the same number of down days in this run that we had from August 17th into the 31st. So there's to be a lot of symmetry and harmony coming through, but that doesn't come through until Monday. So, the key date to watch here is on Monday. That's the way it looks like on the British pound, if it's going to hold that level. Now, I have some information that was shared to me from my friend John Murphy, and these are very interesting charts. They have to do with correlations of markets. And the first one we're going to look at here is the high yield corporate bond market, also known as junk bonds. That's HYG, the ETF for that. And that's compared with the energy sector. And as you can see, this has a tremendously high correlation for the past year. Past half year. The last 26 weeks has been incredibly positive. And as you can see on that energy chart, which is the black lines, the red lines are the junk bond, and you'll notice that ABCD pattern is also completing here. So that's another reason for us to expect a rally. And if you look at what happened right before that black arrow, you see the ABCD pattern that occurred, what brought the market, down to where we were yesterday. So that's just completing it. Now we should get something like this pattern completing around October the 19th. Now that would be the time when I would think the rally would be happening. So we'll wait to see if this is going to be the case or not. But that's what we're watching here in this. This just shows that correlation that I think is relatively important. Now the next one that John Murphy furnished us was the one here on the investment grade corporate bonds and treasuries and high yields, looking at them all together. And as you can see from the red chart, which is the high grade bonds, the junk bonds, they've been in the toilet, whereas the investment grade corporates have held up extremely well. That's the blue line. And of course the treasuries, going for the flight to quality, have been the strongest. They're all going to go down because interest rates are going to go higher. There's no question about that. I mean, we've been in a 32-year bear market in interest rates, and that's about ready to turn. And it could turn pretty dramatically, but we'll wait and see. But anyway, this is what's happening right now. As the flight to quality occurs with the movement down in stocks, people get rid of junk bonds, hold their corporate bonds because they're yielding such a good, a good percentage compared to what we're getting in the treasuries. The 10 years like 1.8% or something like that. So that's why they do that. But this is what we're looking at. And these are huge markets, folks. These markets are far, far bigger than the stock market by a long shot. I mean, a great deal of this. So the last one that I wanted to bring to your attention was the investment grade corporate bonds versus stock. We've seen this chart before from our good friend Todd Gordon, and it basically shows that these corporate bonds, high-grade corporate bonds, these are the AAAs and AAs, have a tendency to have a really strong correlation with the stock market because people have to put their money someplace, after real estate and art and all that other stuff. So anyway, this is what we're looking at when we're watching some of these things start to unfold. Now, we did make we're talking about gold here because gold was trying to make a bottom, I thought, but I could be, completely wrong. We did make a perfect retracement in the platinum yesterday on the long-term butterfly pattern that we had. I'll post that in here so we can take a look at it. But now what's happening now, platinum is making a secondary test today, and we're going to see if it's actually going to hold above this $900. We're trading at around $912 right now in the platinum. Okay, we're going to take a little break. We'll be right back after these words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and I posted into Tiger TV the long-term interest rate going back to the history of our country, starting back around right after 1776. And it was, you can see we've had these tremendous swings in interest rates over the time period, and now we're historically near the absolute low that we had almost right after, World War II. So we'll see what happens. That big spike, 1980, is when we had the oil shortage and the lines for oil, and then we also had inflation running at about, I think it was 13-14%. It might have been higher than that. And then came in and took advantage of his position as Federal Reserve Board chairman and took care of interest rates. I can remember being at Drexel and buying. We were making pretty good money back in those days, and I can remember putting away money in long-term municipal bonds, yielding tax-free, yielding 16%. California Muni AAA bond. Unfortunately, they were callable, and about 3 years after I owned them, they were called away. But during those 3 years, it was actually pretty good. Speaking of my old days at Drexel, we had a very good friend who was one of the associate producers of the Johnny Carson show, and Mel passed away yesterday. My daughter, called to tell me he was a good family friend. He used to get us into the Tonight Show whenever we wanted to go, and it was really fabulous. And still, the two funniest things I've ever seen on television was the New Year's Eve show with Ed Ames, who played Mingo on the Daniel Boone series, but he was also a opera singer, and he was performing at the Met, and he came on the Johnny Carson show in his tux, and he played the Indian in Daniel Boone's thing. And so Johnny Carson gave him this wooden box, and inside the box was a tomahawk. And he said, I want to see how good you are at throwing this. And so they pulled out a little mannequin of a cowboy about 30 feet away. And he said, take this tomahawk and see if you can hit the cowboy. And so Ed Ames picked it up, and he threw it, and he hit him right in the old soft spot, right in the kahunas. And they hit it so that the handle of the tomahawk was sticking straight up. And it took... that was the end of the show. For for the next 20 or 30 minutes, that's all they did was laugh. I mean, there was nothing else. If you ever get a chance to see that, it is one of the funniest things I've ever seen. The other one that was funny was he had Zsa Zsa Gabor, the actress, on, and she was with her, and she had this beautiful white Cheshire cat that she was pointing to Johnny. She said, Johnny, would you like to pet my pussy? And Johnny Carson, being the little witted guy that he was, he said, sure. He said, let Ed hold. And oh my gosh, I laughed so hard. And then what happened was, about 2 years later, Jane Fonda was on the show, and she didn't believe that this is what happened. She said her son told her about this episode, and she still didn't believe it. And that has nothing to do with the FCC. That's been on for many times. There was nothing off color about that, but those were some of the funny things, because he was the master at wit. He certainly was. But it was really quite funny. But that Ed Ames thing, if you haven't ever seen that, it was around 1960. But it was fabulous, no question about it. It was really something. Anyway, that was really good. Anyway, we'll get back to the markets here. We're going to open here in a few minutes. We're going to open sharply higher, it appears. And the question is how high we're going to go in this rally. It's either going to be somewhere between 1 and 3 or 5 days would be my guess. That's usually all you get. The last time we had one of these rallies, it lasted 1 full day. That was on the 24th to the 25th, and that was it. So we'll see that pretty much what you're looking at, and we'll go from there. I was talking about Johnny Carson. I was to see that Johnny Carson show so many times because Mel was associate producer, and he'd get us in anytime. And we were able to meet Johnny Carson on several occasions, and Ed McMahon. But the really guy that was really nice was Doc Severinsen. He was just a really super nice fellow. He let the kids play the instruments and stuff. So it was really a lot of fun. Anyway, we'll see how the market opens in here, and then we'll see what this rally is going to bring us. But overall, folks, there's no way to look at this market other than it is going to be weaker. We made that big ABCD yesterday, and we'll see what happens with the market after this rally is finally over. Remember, the last rally lasted 50 handles in the S&P. We were already up 50 handles from the bottom. Wait, we almost made 50, 60 to 4. No, we're up 40 handles from the bottom so far. We could get easy to 50 handles and even a little higher, because 1918 in the S&P is that key fib number of 58.2 and 61% retracement that we need to be watching here. Okay, we're going to take a little break here to pay a few bills for our Chairman O'Brien, and then we'll be right back after these few words.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks. And I just wanted to put in the longer-term chart and the S&P 500 that I'm looking at. We're still trading. This is from a few days ago, of course, but we're still trading below that last low. We went down and almost took that low out yesterday, so we made almost a double bottom in this. So we're due to have some type of a very good correction. And usually, these bear markets usually only last from 1 to 3 days, depending on how bearish. Remember, the last one happened on the 24th. We had a good bottom of September. We rallied into the 25th, and then we came down really hard these last few days. Into that ABCD structure. This is a big ABCD, so we could get even a larger move off of this. But the 382 and 786 number, or 618 that I'm looking at, come in at 1918 in the S&P. That would put the S&P up about 45 for the day, and it could certainly do that. A market that can, if you take away $45 from you, and certainly give you $45. So just keep in mind that when the freight trains, it doesn't take very long to get it moving because the market is very, very oversold, and we've only had that one really good rally on the 24th to the 25th. So we are in oversold territory, so we are due to have a pretty good rally from this point. So we'll see, and then we'll take a look at what's going to happen. But my assumption is we're probably going to get up higher into those levels without too much trouble. We're not very far away from 1918 in the S&P. We're only 17 handles, and we can make that very, very easily. We made a new high now in the Nasdaq early morning, which is not surprising, and that number comes in at 4190. So these numbers are, quite a ways away from, what we think they're going to go to. I mean, that's just what it's what they look like. Yesterday the market was doing exactly what it needed to do to get down to make those numbers, and it certainly did. And the Dow was telling you that it certainly didn't want to go down very much. I mean, it was down like 50 points with about 20 minutes to go, and they turned it on a dime and ran it very, very quickly. So now the people that didn't buy have to pay up for it. So we got the S&P up 30 handles, and we're up 73 handles already in the Nasdaq and 230 points in the Dow. So this is certainly a really strong trending day that'll probably whether it can do the whole thing or not, we don't know, because the market is very, very volatile. But remember, our volatility is really nothing like what we've had in the past. It's still very, very shallow. Even though we're having these 300 and 400 point moves all the time. We have a question in the room about the cattle market, and believe me, that cattle market is under big trouble because it should have had a bottom down here at 34 and 134, and we've dropped 8 cents below that. So the demand for meat evidently is dissipating quite a bit across the country with the cattle. And they were limit down yesterday, and they're down almost the limit today. So that would be 2 limits in a row. I took the long side of that a few days ago and was out of it in a matter of a few hours because it just kept going down. And so you got to start, because these, when these trades don't work with these numbers, folks, that's the only thing that I have to hold on to, is that if these numbers don't hold, then you're looking at something that is really, really quite amazing. So don't be surprised if you see some spectacular things happen in the market here, because we are very, very oversold, and we can make these moves very, very quickly, and sometimes they'll give them up that quickly. We've seen that before too. So be very nimble in here as you're trading. If you're trading long term, you find something that you want to buy and you want to hold it, well, that's up to you. But make sure you put a stop in on some of these things, because it's can be very, very treacherous if you don't. A perfect example today was gold. I mean, it was set up so perfectly. Silver was set up perfectly. It actually had a nice little profit in it, but gold, most it gave was $4, and then what did it do? Started to go on. You don't have to miss. If you're going to buy it at 119 in the gold, it's that number is so accurate that the next number down is 110. Do you want to risk $900 on a trade that you feel is going to go to 110? Of course not. So you figure $3 to $4 on the trade, and then if it gets down to 110, you can look at it at that point. And gold's trading at 111.12 now, 11.12 right now. So you're very close to that 786. So if you wanted to try it there, try it with the $3 at that point. You're still better off than if you risked $10 on the first trade, which isn't very plausible, in my opinion. So that's all I'm looking at. And now we've got the Dow pretty strong, except 220, with not all the Dow stocks even open yet, because we've only been open about 10 minutes. The S&P's up 28 handles. The Nasdaq is up 71 handles. So we started off here with a big boom to the upside. Whether we continue or not, we'll wait and see. Every time we've had one of these big moves in the past, it's sort of fizzled out. Whether it'll do it this time or not still remains to be seen. But remember, any market that can give you 70 handles in the NASDAQ can take 70 handles away from you. So We are continuing to strengthen. We're making new highs as we speak, and so nothing has happened. I would think the first hour will be the thing to really watch, because that'll be the spot where we find out whether this market is going to have legs enough to stay up here for another day or even continue, the rallying the rest. At the first hour, we're still running. We're only 13 handles away. 1918, and maybe I'm wrong, and maybe 1918 doesn't hold it, and the market just continues to go up. That's certainly a possibility. But yesterday you certainly didn't want to sell this thing in a hole, because we had a lot of things telling us that we were at a pretty significant bottom in some of these things. Even the New York Stock Exchange Index, and believe me, the breadth is still very, very bad. This is all we're looking at, is a really strong rally. The key here is the fact that the New York Stock Exchange Index could not make a new low from the August 21st. August 24th came very, very close to it. We couldn't do it. But I frankly think the thing that I was watching the most, there were two things. There was the bond chart, and I put up the 4-hour chart of the bonds that shows you what it looked like, over the past 6 weeks. You'd see it made a perfect ABCD pattern up at that 157 and change level. But if we went and looked at a 4-hour chart, which blew it up just a little bit more, you were able to see that this last little extension, which made the D point of the ABCD, took us up to this 158.05 level to 158.10, and there was a lot of resistance up into that area. And so far, we've backed off about 1.5 handles from that point. As a matter of fact, the bonds have actually held up much better than I ever thought. They're trading at 157.16. They're only a half a point away from their high. And given the fact that what's happened with the market, we're 300 and some points higher in the Dow Jones than we were at the bottom. Why aren't bonds down 2 handles or 2.5? They're only down a half a handle from the high. That doesn't make any sense. So, maybe this is just another fake out to the upside. We'll have to wait and see what happens. But that's what it looks like from the cheap seats here in Philadelphia. But we'll wait and see. But keep an eye on that bond market, folks, because if it gets above 158.20, this stock market's going to have a hard time going up, would be my guess, because there's a pretty strong correlation with the flight to quality with these things that we're looking at, and that's pretty much what we're watching as we see this unfold this morning. We've taken out the highs of yesterday now in both the S&P and the NASDAQ. The NASDAQ had barely been able to do that until the open here. The old was at 41.40, and we took that out. We got up to 41.50 so far this morning. Remember, 41.90 is one of the numbers that we want to be watching in the NASDAQ for a potential, major resistance point to come in. But we should be getting, more liquidity or more volatility like we have been getting. So let's just watch that. This market is just, it's just flat out bearish, folks. I just don't see how you're going to be able to get around it. And when you look at what's happened to Volkswagen, that's 30%, more than almost 40% in 2 days. So, and that's the largest employer in Germany. And Deutsche Bank, the largest bank in Germany, it's got a horrible chart. He's got a chart that looks like the chart of Lehman Brothers, for heaven's sakes. In fact, I wanted to put this in here. I showed it before, but this stock looks like it wants to go to, it's trading at 20, I think it's 26.5 or something like that. It's even lower than this chart right here, but it gives a price objective of $4. And if you don't think a bank like that can go to $4, look what happened to Citibank. Citibank had a reverse split, 20 for 1. Otherwise, it wouldn't even be trading these days. So these banks might not always have someone watching their back. So we'll see. Someone asked me a question about Glencore. That's the UK hedge fund that is very large, and whether they will go bankrupt or not, I have no idea. Just look at the stock, because the stock will tell you where it's going. If you see it give up 30 or 40% in a matter of a couple of days or a couple of hours, you can pretty much guess that's that's what's going to happen. But it's still real early in the game, and you don't want to put a ribbon on that and think that could happen. I don't know. If you look at Volkswagen, they've got really serious problems from the stock point chart, and also Deutsche Bank. Also, Deutsche Bank looks, really negative. It's been going down for a very long time. We know they have some serious problems, but the chart is pointing, far, far lower. And unless they come out with some kind of a story, I don't see anything that's going to, turn it from this level. We could get a 3 to 5 day bounce, of course, and it could be substantial. But watch those two stocks, because that's going to be a big factor of what happens, with the euro, because, Germany is the big backer of the euro. And, we're still looking at, much, much lower prices in the euro. There's, our minimum objective here is down 107. We're trading at 111 and change, or 112 and change right now. So, and our overall longer term objective in the euro, of course, is at par, 100. And they've been there before. The euro started in 99. It went down to 85. It went up to 160, and then back to 85. And so it has some really, really good moves. The U.S. dollar is just in this really tight trading range between 97 and 94.5. And until it pops out of that either way, I don't see it doing very much. The ones that look interesting to me are the Australian dollar, of course, and the Canadian dollar. The Canadian we've been watching and trading from both sides of the market. But if we take a look at the really long-term Australian dollar, and this is related to China and commodities and everything like that, you'll see that there's some really strong cycles. It's a really nice head and shoulders pattern here. We have that 1-3-5 pattern that Roy Longstreet likes so well, where 1 and 3 and 5 are all higher, so you have higher bottoms. The last bottom that we're in right now with the Australian dollar down around 70. The low has been 69 and change, and that tells us that we have some type of a possible bottoming pattern forming in this right now. So that's something that looks, really interesting, at least from my perspective of the currency. We see the same thing in the Canadian dollar, where the Canadian dollar is weakening to the U.S. dollar. And that should also be in an area where it's getting ready to change. And this might be the thing that makes the stock market bullish. I don't know. Maybe the commodity markets are finally turning, and business is going back to see what's going on. We're going to take a quick look now at the chart of the banking index, because it hit a pretty good low yesterday. Didn't quite make a new low from August, but it did has a bounce coming in from this level. So we did have a 2-week rally off of the August 24th. We came down, gave back almost all of it, and now we're just, we're correcting a very strong oversold situation. And the way the market rallies the way that it does, that's indicative of how these things move. I mean, they literally go straight up, and bang, you turn around and, go have a cup of coffee, you come back and say, my God, what happened to the rally? And it's all over. So you want to watch that as you go through this, but we'll keep an eye on this. I was hoping to have Rich Anderson on today, because the cattle market, the cash cattle market, is really a thing to watch, because they are just taking no prisoners in October cattle today. So this is probably going to be a bottom day in cattle, given the big volume swings that we're seeing. But it's not for the faint of heart. But we'll watch it just to see what happens. We have a possibility of these grains have held up relatively well here over the past few weeks, so we'll see if that's going to be much of a problem, but most of the commodities are still, they're still down. We got platinum down 5, gold down 13, silver down 7. So, they're just still trending lower. So we'll see if this is going to be the case. So we're going to take a little break here. We'll come back and we'll wrap it up.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I wanted to reiterate where we are in the market. So I put the NASDAQ chart in, the 30-minute chart over the last 10 days. You'll be able to see that big ABCD pattern. Now, if we were to replicate what we did during the 24th to the 25th, where we had that really strong one-day rally, that would bring us up to about 41.75. In the NASDAQ, we've been to 41.50 so far. That would also equal the rally that we had from the 15th of September into the 17th, where we had the Mercury going retrograde on the 17th when the Fed was working. That would equal that type of a rally too. So it's about 250 points in the S&P would take us up into that area, and those would be major Fibonacci numbers at that point. So keep an eye on that. That equivalent number in the S&P 500 is at 1918. I don't know what it would be in the Dow, but my guess it'd be somewhere about 150 points higher than where it is right now. And whether it gets there or not, will remains to be seen. One of the things that we want to do tonight is, which I will do, of course, and I will not be on the show tomorrow. As I mentioned before, I will be traveling, so I will be back Friday, but we'll double check with this on Friday too, as we want to watch this to see how some of these markets are holding up against these resistance points, if we get to those levels. So, and remember, the last rally that we had only lasted a day. And whether that's going to be this time or not, I don't know. But the overall market is still relatively very, very bearish. And, I don't think it's going to go very high, given the fact that, the things are bearish. I mean, we can't have a good rally because we've broken quite a bit. We've been down hard all during August and September. And remember, October is the month where you usually come up with a bottom. And maybe this was close enough yesterday. I don't know. I could be 100% wrong, but I have to go with what I know, and I believe the bottom will come in early October, probably around the 6th of October, which will be a week from Tuesday. So that's what we're seeing here, folks. Live every day in an attitude of gratitude, of course, and do something nice for someone that has a lot less than you today, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.